The cost of cars and trucks in the United States is finally dropping. New research shows the downward trend has been quite significant on vehicle prices already. Experts at investorplace.com are warning that the latest developments are, in fact, proof that the auto market crash has begun. In this environment of higher interest rates and rising inventory levels, Blue Book values have been consistently declining, with analysts projecting a reversal in the market happening this spring and alerting that prices are on their way to find a bottom. Dealer incentives are up 102% year over year, according to fresh data, and we're now being told that the long-awaited crash is going to give Americans much better chances of finding an affordable vehicle in 2024, and also that the conditions which helped to fuel the auto price bubble and overall inflation for nearly 3 years are no longer in place, setting in motion the much-needed correction everyone has been expecting. Cox Automotive reports that the recent price declines are due to a vastly expanded number of vehicles on dealer lots after years of severe shortages. With more cars and trucks available, the pressures that had sent prices surging are disappearing at last. At the start of April, American dealers had almost 3 million new cars, trucks, and SUVs on their lots. For comparison, only 1 year ago, that supply was standing at just 1.7 million. This is one of the reasons why many analysts and dealers say 2024 will be the most affordable year of the past 5 in which to buy a new car or truck. The owner of Ford dealerships around Canton, Ohio says, "When the lots are empty, there's not much of a bargaining position from a consumer standpoint. But now that we have inventory, it's much more competitive, much more like it has been historically." During the pandemic, a worldwide shortage of computer chips, which are vital to auto manufacturing, forced plants to curb production, causing price spikes all around the globe. As vehicle availability shrank, the car bubble grew. By 2021, some dealers had no new cars at all in stock. Many frustrated buyers turned instead to the used market. The resulting surge in demand for used cars caused those prices to soar too, elbowing many people out of the auto market entirely. But with computer chips now abundant, auto production is rising steadily, leading to an inventory glut in many cities around the country. Consequently, the average price for both new and used cars is going down at a brisk pace. In the past 5 years, new cars faced an average increase of an impressive $11,700, reaching over $55,000 during the peak of the bubble. But since January, the scenario has meaningfully changed, and according to data collected by Edmunds.com, the average price for a new vehicle is sitting at $45,283 right now. Though the drop hasn't brought the market back to pre-pandemic levels yet, experts predict that prices will keep falling this year, especially for new vehicles, as availability grows and automakers are compelled to lower prices. Omar Afani, known as the richest car dealer on TikTok, said in a viral video that, "If you're looking to buy a car, just wait. The market is about to crash and no one can tell me I'm wrong." Afani warns that an influx of repossessed autos currently flooding the market is a sure indicator that the United States auto market is close to bottoming out. He further explains that when a company repos a car, they send it to auction to try and recoup some of the money that's owed on that vehicle.
If you're looking to buy a car, just wait. The car market's about to crash and nobody can tell me I'm wrong. Let me explain. For those of you that don't know, I do own a semi-empty car dealership. Over the past couple months, we've seen an influx of cars at the auction coming from repo companies. Companies like Coastal Finance, Westlake, Wells Fargo's even put a ton in there. Acceptance and American Financial have put a ton of cars in there. But all these cars are coming into auction as repossessions. Now, when a company repos a car, they send it to auction to try and recoup some of the money that's owed on that vehicle. Now, normally when they send a vehicle to auction that still has some money left over on it, if the customer had any equity in it, it'll bring a little more than what's owed at auction. And then the customer would get the extras. The bank would take what they're owed and the customer would get a check. But that's not what's happening right now. See, during COVID, a whole fuckload of people realized they have a little more money than normal because of stimulus checks, unemployment, and a whole bunch of other shit that went on during COVID. So all these people went out, bought cars, overpaid like a motherfucker for them. And these people didn't pay cash. They literally put the lowest down payment they possibly could. And then they left that lot with negative equity. Like a lot of negative equity. And that negative equity comes from the car being overpriced, interest rates, and a low-ass down payment. And now car prices are coming down and these people are realizing, holy fuck, I've got a car that I've got $20,000 over what it's worth in negative equity in it. Or, holy fuck, I have a car that's supposed to be like 30 grand that I'm paying like $900 a month on. And a lot of people are getting their cars repoed because they're just refusing to pay or they can no longer afford the payments. Now, what that's done is it's created an influx of cars at the auction. Cars that people like me don't want to overpay for. There's a reason my lot is half empty. And that's because while I'm looking at cars like a 2014 Toyota Tacoma with like 55,000 miles on it that books around this area, books $23,000, and the sellers are trying to get for between 27 to 30 grand for it. I ain't buying that shit. Because if I buy it, it's going to end up stuck on my lot. And you guys mark my words, bro, in the next 6 months to a year, car prices are going to drop like a motherfucker, and a lot of car dealerships are going to be stuck. They're going to be stuck holding inventory that they overpaid for because they couldn't sell it. So again, if you're looking to buy a car, I would wait at least a few months. Because car prices are about to drop, dealers are about to eat shit. Well, the ones that don't know what they're doing anyways. But the repos just keep coming. They just keep coming. They ain't slowing down at all. Not from what I've seen. Tell me I'm wrong.
The car dealer highlights that many people bought cars using stimulus money at inflated prices, resulting in negative equity. But now that a nationwide correction has begun, Afane argues, many people are simply refusing to pay their inflated monthly car payments. As a result, the number of cars being repossessed is going through the roof. There are now millions of vehicles in the market that finance companies have not been able to offload to dealers at auction. On the same note, several market analysts say they expect new and used auto prices to fall further this spring and beyond, despite the fact that we're historically in the middle of the peak buying season. Last month, automaker discounts on new vehicles, including rebates and low-interest financing, averaged $1,469 per vehicle, 5 times what they averaged a year earlier. Ivan Drury, the director of insights at Edmunds, says that we're already seeing that automakers are offering even bigger discounts for slower-selling vehicles. He further added that discounting will extend to additional vehicles in the coming weeks and months, meaning that buyers who don't need a vehicle right now might be wise to wait a little longer. While consumers may feel some relief in vehicle prices and incentives, automakers and dealers are feeling the results of the downward price pressure. The latest dealer sentiment survey by Cox Automotive clearly indicates that dealers are seeing profits contract as inventory levels return to normal and incentives are turned up to help stimulate sales. Of the 35 brands that Kelley Blue Book included in its latest analysis, 16 reported year-over-year price cuts in March, with largest declines recorded with Tesla, negative 20.5%, Land Rover negative 6%, and Nissan negative 5.7%. Meanwhile, new vehicle average transaction prices last month declined by 2.7% and are now down 5.4% from December. The average incentive spend from manufacturers increased 11% to $3,121, a 102% surge year over year, reaching the highest level since May 2021. When we look at price strength, the pandemic created a seller's market in which new vehicles were transacting above manufacturer-suggested retail price in 2022, said Michelle Krebs, executive analyst for Cox Automotive. That market is all but gone now, as high inventory has led to higher incentives and discounts, lower margins for dealers, and vehicles are now typically selling for under MSRP. The shift from a seller's market to a buyer's market is well underway, Krebs stressed. So far, all vehicle segments have experienced declines, notably luxury cars minus 13.2%, SUVs minus 13.5%, compact cars minus 16.9%, midsize cars minus 15.9%, and pickups negative 14.6% compared to year-ago levels. Sharp price cuts by Ford and Tesla, along with the introduction of some more affordable models, also helped lower average EV prices. Electric vehicles depreciated the most annually, dropping on average by 16.1%. Some models are selling for 30% below the MSRP, Cox's auto research showed. Additionally, many analysts anticipate notable price drops for used SUVs and sedans due to ongoing turmoil in the global oil market. Competitive pricing from manufacturers may sway consumers towards larger, less fuel-efficient vehicles, the research said. Prices for some 1- and 2-year-old vehicles are nearly as expensive as the prices automakers are charging for new vehicles. Researchers have found low-mileage 2023 Honda CR-V models, for instance, being advertised at close to $28,000. At $31,000, the base price for a new one, including shipping, seems like a better option. With an average used vehicle loan rate of 11.5%, it might be more cost-effective to pay slightly more for a new vehicle in order to secure a reduced rate from an automaker's finance arm. Rebecca Lindland, senior director at Cars.com, predicts further improvements for buyers. Low price availability has already risen by 63% as inventory production recovers. The beginning of a buyer's market is offering reassurance for prospective buyers and investors alike. This will be the first time in almost half a decade that Americans will see some relief at dealer lots. Initially, what car market crash experts and analysts were talking about seemed way too distant from reality, but now we can see how rapidly things can change before our eyes. Though it may take a couple of of months before the market hits bottom, we're already witnessing this historic correction unfold.